the size of your success is not dependent on education, gender, race, socioeconomic background, any of that garbage, where you went to school. The size of your success is directly correlated to the size of your thinking. Do you have the balls to just go and do big deals?
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Well, welcome everybody to the Hero Capital Raising Show. Today, we have an amazing guest on the line with us, Tim Bratz. Tim has done amazing things in the commercial real estate investing space, both as an investor as well as an educator. So I'm super looking forward to this. Tim is the CEO and the founder of Legacy Wealth Holdings, which is an investment company specialized in transforming distressed commercial assets, multifamily assets, into high-performing investment assets. Tim started his real estate investing career in 2007 as a commercial leasing broker agent in New York City, and bought his very first duplex investment property using his credit cards back in 2009. He had gone a long way from there to now having owned over 4,500 rental units, over $400 million in assets, and has raised over $100 million. Tim has, I know of Tim, when he started teaching commercial empire a few years ago, and so has gotten to see and witness a lot of people who've been through his program, and I mean, they all rave about you, Tim. Yeah, so I mean, you're out there, you're making a difference for a lot of people. And then you also launched the Legacy books, right, for the young people, super young. I love that project. Definitely love to hear more about that on our interview here today. And yeah, so Tim is a husband, father, graduate of the Goldman Sachs 10,000 Small Business Program, mentor of the Legacy Family Mastermind. There was a new program that you launched recently, right? An education online. Legacy Wealth Academy. There you go, an online education platform. So with that, everyone, let's give a big welcome to Mr. Tim Bratz. Tim, welcome, buddy.
Appreciate it. Good to be here. I appreciate you having me, buddy. And I appreciate all the value that you're always putting out. You're always trying to make an impact and lead with value, which it's fun to see the good guys continuing to win and all of us kind of coming up the ranks, right? Like a lot of us knew each other from back before we were like successful. And it's cool to see, again, the good guys winning. So I love what you're doing, man. I'm super proud of you and just an honor to be here. So I appreciate you guys having me.
Well, thank you. Yeah, definitely. So share with us, Tim. I know you went from flipping houses to commercial real estate. So share with us your journey on what made the switch. How you made that switch.
Yeah, I mean, well, high level, I went through college 03 to 07. So I'm from Ohio originally. And when I was going through college, everybody was making money in real estate. I mean, there were people who weren't that smart. And I was thinking, like, if this guy's making money, I'm going to get rich if I go and do this stuff, And so I was really ambitious about getting into real estate after I graduated. My brother lived in New York City, like you had mentioned. And so I thought, when else can I go and move out to New York City, live for free, and figure out this whole thing? So moved out there when I graduated in 07 and got my real estate license. I thought that's how you got involved in real estate. And then for some reason, I didn't do residential, though. For some reason, I put it with a commercial brokerage that brokered retail leases, office leases, and ended up, it took me about 9-10 months in order to close my first lease transaction. And it was a little 400 square foot space in Greenwich Village of New York City, at the corner of Bleecker and Thompson. I know there's a couple of New York people here. And so broker this 400 square foot space for $10,000 a month with 4% annual increases on a 12-year lease term. And, as a money hungry kid at the age of 22, I started doing the math on this. I'm like, holy smokes, like this landlord's going to make almost $2 million residually over the next 12 years for doing something once off of one small space. He had 8 retail spaces. All the other ones were bigger than this one. And he had like 10 or 15 stories of apartments above it. So I quickly realized I need to be on that side of the coin, not brokering real estate. So I moved down to Charleston, South Carolina. I know there's a few people from the Southeast in here. and which is where I live today. Again, 2008, summer of 2008, I moved down there. I go through the analysis phase of joining all the groups and attending all the courses, reading all the books. And I show up to the party ready to jump in and start buying real estate. And all of a sudden, October of 2008 happens and the whole economy collapses. The global financial crisis occurs and everybody says, run from real estate. And I'm like, I just got to the party. What are you talking about? And, so I ended up in a position where very different from today. Today, a lot of money out there, not a lot of opportunity or deals, Back in 2008, deals everywhere and nobody would lend money, at least not to a 23-year-old punk kid who had never done a deal before. And with all the headlines saying how the sky is falling, the economy's collapsing, nobody was going to take a risk on me. So, I think some people say I can't do it and the brain shuts down. I always try to ask myself a question. I think asking yourself good questions stimulates better ideas and stimulates better question or stimulates better answers. And I said, how can I, right? Who's giving me money right now? How could I afford this? And the only person giving me money at the time was MasterCard. And I called them up, asked them to increase my limit. They did to a point where they gave me $15,000 and I found the cheapest house on the MLS, slapped it on my credit card, physically did all the work to it. And I sold a pig. It was just a pig with lipstick on it to one of the neighbors who ended up leveling the house and turning it into a parking lot. That was the highest and best use and how poorly renovated this property was. So, but I made the biggest check of my life up until that point, right? It was $13,000 of profit. And I was like, I don't know what I'm saying, run from real estate. And this is the biggest check I've ever made, which taught me that it's not about the economy, right? It's about your economy. What's my economy look like? It's not about what's happening in the news. It's what are your business models? I knew people who were worth tens of millions of dollars that went bankrupt in the last downturn. And I know people who were tens of millions of dollars that are now worth hundreds of millions, if not billions of dollars. And I'm like, how does the same economy happen to everybody? And the difference is it's like sailing a boat, right? The same wind blows on us all. If we're sailing a boat, how does somebody win a boat race if they're sailing a boat when it's the same wind? It's not the wind that's blowing, it's the set of the sail, right? It's based on the business model. It's based on your mindset. It's based on how you structure your deals and your business acumen and how you can navigate different situations and pivot when things happen. That's the differentiator, right? So work harder on you than you do on your business, kind of a thing, the whole Jim Rohn mindset. And that's what I ended up doing, man. I just focused on how can I keep on dialing in me and making me better and dialing in my processes and dialing in my business model and dialing in my strategy. And that's what kind of led me to starting to buy and hold type properties. It wasn't the sexy thing. It wasn't fancy. It wasn't the HGTV flips, but it was like C-class rentals that I could buy for 10, 20, or 20, 30, $50,000 when the market tanked that would rent for $600 to $800 a month. How do you lose on that? You don't. And I built up a small portfolio that way, got enough hanging out in circles like this, right? Like I commend you for putting a group like this. Like there's some players in this room as people are introducing themselves. I'm like, man, some people doing some big things. And I didn't know that these groups even existed, right? I plugged into like Real Estate Investors Association, and that's almost like the blind leading the blind in most of those. But there's a few players in the back who stand against the wall like this, who are actually out there doing deals. And I'd go and meet them and try to source deals from them, try to raise capital from them. I'd wholesale projects to them. And dude, just creating the momentum, right? Being in the right rooms, showing people you have a work ethic, showing people you do the right thing. All of a sudden that stuff compounds and your character compounds and your reputation compounds to the point where people say, hey, I don't have the bandwidth, I don't have the time, but I have capital, or I have access to capital. How about I put the money with you, Tim, and then you go out and do the work and let's come up with some. That's how I got my first private money lenders, was on some sort of equity split. So that's kind of awesome. the fast track. And then, you let that stuff compound, and all of a sudden, you pick your head up after doing that for 10, 15 years, and you're like, holy shit, you got a big portfolio.
Yeah, that's awesome. So I want to touch on something you mentioned first. I mean, starting for you to think look at from the perspective of how can I, who's giving out money right now? The economy is not my economy. Those kind of mindset, I love to hear, where did you get that mindset? Because most people starting out in real estate and business don't have those kind of mindset. So how did you come about picking those things up?
Dude, here's the thing. I joined a network marketing company. I got asked out to a home meeting juice at a network marketing company when I was like 20, 22, 23 years old. And I was like, oh man, I can go and get rich in this other network marketing company, thinking that they had residual income and products and all this other stuff. And it aligned very well with real estate. And here's the thing, didn't make any money. I was in the top 1% and I made like 30 grand a year. But the benefit was the way that they keep you is they pour into you from a personal development standpoint. So I met teachers like Tony Robbins and Jim Rohn and these thought leaders. And dude, I just turned off the radio and I started listening to, CDs and audiobooks. And I started I pretty much, I had a 4.0, but I cheated my way through high school, I only read one book in all of high school and college. And then all of a sudden I read 12 books the year after college. And it was all, Think and Grow Rich, How to Win Friends and Influence People, Richest Man in Babylon, Rich Dad, Poor Dad. And I got an MBA by in personal development and those insights from the things that I did outside of traditional education. And so I think when you realize that 80% of this game is all up here, it gives you the staying power, and you realize, you work harder on yourself than you even do in your business, because that stuff compounds.
That's awesome. And then so in your transitioning into the commercial side, into the multifamily side, how many units was your first deal?
Oh man. Yeah, so I started out in the single family world, right? I was wholesaling, I was fix and flipping, I got into single family rentals. And then I came across a deal in 2012 that was an 8-unit apartment building. And it was at a price that was so stupid that I had to offer on it and I had to buy it. 3 out of 8 units were occupied. It needed some work, but I bought it for 30 grand,
Oh, wow.
And so in a C-class, C- area of Cleveland, Ohio. And I put another 50 into it, but still I was into it for 10 grand a unit, $80,000. And,
wow. And
the NOI was 27 grand. So if you're familiar with cap rates, it's about a 30% or more than that, 35, 33% NOI. And so, or cap rate, right? That's pretty good. But I was self-managing it and, all this other stuff. So here's the real aha moment for me though, is I drove to one location instead of 8 locations. I looked at one roof. I looked at one foundation instead of 8 foundations. I negotiated with one seller instead of 8. I raised money on one deal instead of 8 deals. I was able to go and collect rent. I was able to go and meet a contractor at one location instead of 8. I had one tax bill, one utility, one water bill instead of 8, right? And so the scale of getting into multifamily, it resonated with this sense of efficiency that I've always kind of had inside of me. And I was like, this is where I want to be. And I ended up selling off any single family properties that I owned. And I did I just kept on trading up, and I did 1031 exchanges into an 8-unit to another 8-unit to I bought a 14 unit. I rolled those into 23 units. Then I bought a 31 unit. And then all of a sudden you pick your head up and you're sitting on like 140 doors in a couple of years. And those 140 and between that 140 that I was holding, plus probably transacted another 100 doors on top of that. So that 240, 250 doors, the first ones that I had exclusive partners, and I gave them 67% ownership in all the deals that we did. They brought the money.
Wow.
I did 100% of the work for a third of the equity, and I didn't take any fees, right? I didn't make any money, no asset management. I had a $3,000 a month salary, and that was it. And that's what I valued myself at back then. And but I think a lot of people get caught up on the first couple deals. Well, I brought the deal, and in my wholesale deals, if I find the deal and you find the buyer, we split it 50-50. So I found the deal and I want 50% of the equity. Well, it's like, dude, who's going to asset manage this thing for the next 30 years? If you spent 90 days finding the deal, like somebody has to project manage, property manage, asset manage, who's raising the money, who's sponsoring the loan. There's a lot of other players involved when you're buying and holding property instead of just transacting it. And that was, part of the thing. So anyways, a lot of people come to me and they're like, hey man, what's a fair something like this? And I explain there's a lot of moving parts, right? Depends on the deal, depends on who's doing what, depends on the exit strategy. But at the end of the day, it's like, who cares how much equity you got, right? Like it's not about this deal, right? It's about what does this deal do to set you up for future deals. This one deal will set you up to take down the next 10. The next 10 deals are going to set you up to take down the next 100. And all of a sudden, you're going to pick your head. Like, dude, you can build up your equity and have way more equity in future deals after you've already gotten punched in the gut and slapped in the face, going through the learning curves on the smaller deals. Like, who cares anyways, right? And as you build up your cash flow, right, and your cash reserves and your reputation, you can start sponsoring loans yourself. Then you start getting into more equity into future deals that also have more upside and have less downside risk because you've been in the game longer. So, it's a very short-sighted and I think scarcity mindset to focus on how much equity do I get in this deal right now. I'd always be looking, the way that I got to where I am is I foregone, whatever the word is, short-term gains for long-term wealth building. That was always my play. I would always forego the upfront fees, and more equity built my balance sheet. I knew it built my portfolio. I knew it built my reputation. I knew I could meet the people, right? And I was getting paid essentially and building up equity as I was getting educated in the process. So, I see a lot of people trying to transition into multifamily. That's usually one of the biggest hurdles that they're facing.
Wow. Okay, that's really good. So this partner that you took on, how many you guys did? 140 units together. How many deals is that?
It was a lot of smaller, and I did some single family and duplexes and quadplexes and some other stuff. But my portfolio today, 4,000 doors is like 60 buildings. So it's not really working that hard. It's really working smarter, more efficiently.
Right.
So it's some people who flip 300, 400, 500 houses a year. They work a hell of a lot harder than I work. But somehow I show up and I have a bigger net worth and I have more cash and I have better lifestyle than they do, because you're just doing bigger deals, right? It's the size of your success is not dependent on education, gender, race, socioeconomic background, any of that garbage, where you went to school. The size of your success is directly correlated to the size of your thinking. Do you have the balls to just go and do big deals? And if you play around with thousands of dollars, you'll make thousands of dollars. If you play around with millions of dollars, you will make millions of dollars. And the same goes with tens of millions and hundreds of millions, right? Getting into bigger transactions and bigger deals allows you to make more money.
Right. So for people getting started and looking for a potential partner like the one that you have, was that partner hard to find? Or how would you go about, someone starting out, how would you recommend them go about finding someone like that?
Yeah, I don't like getting married in business. I like partnering on a deal by deal basis, because that partnership, which was in place for about 3 years, ended up folding. I became more valuable, right? And then they didn't bring any more money, and they wanted all this equity, and they wanted more equity and more return on their money. And I thought that was greedy, and they thought there's two sides to every story, right? Somewhere in the middle is probably what's true or what's fair. And at the end of the day, though, it didn't work out. Life happens, and we ended up going separate ways. And it was very stressful, and it wasn't fun. And I had to liquidate the entire portfolio that took me 3 years of my life to build. And I had to press the reset button again in 2015, 2016. So I built my entire portfolio over the past 5-6 years. But that wasn't a fun part of my business. So I wouldn't suggest anybody getting married to other people other than their spouse. However, I love doing joint venture, or I like doing some joint venture deals with the right partners, right? You can bring in somebody who might have a skill or a strength that offsets yours and say, hey, they're really good at raising money. I'm really good at operations, or vice versa. Or I'm really good at the marketing and finding deals. They're really good at the day-to-day activity. And partnering up with somebody who offsets your skills without stepping on your toes or dancing on your strengths is a great way to test out doing a deal. And the beautiful part is you go and buy 123 Main Street, you create an LLC that's 123 Main Street LLC that owns that single deal, and you have an operating agreement that's purpose entity just for that one deal. And if that deal works out, great, you go and do another deal with that person. If it doesn't, you're only stuck with one deal. You don't have to partner with them on all the other different projects, you know? So it keeps you open to kind of date. And if you want to keep on doing deals with somebody, great. You're in it because you love them, not because you have to be committed to them as an exclusive partnership across every project that you do.
Right. That's awesome. So after your partnership ended, you sold off that portfolio. Now you have to basically rebuilding your portfolio all over again. And you mentioned it was like the last 6 years. And so what, starting out on your own, where did you immediately go into syndication, or did you like a joint venture partner type?
Yeah, dude, so I don't syndicate like traditional syndicators syndicate. I come from the single family world. I was flipping, I had a turnkey business. When that partnership folded in 15, 16, I started flipping houses because I, didn't have access to my own cash. As we were liquidating these properties, I opened up, made a couple of bucks, but I started flipping. And so we flipped 80 to 100 turnkey houses in Cleveland. So we buy a single family house, fix it up, put a tenant in place. If it's sold, great. If not, we held on to it for our own portfolio and cash flow. And I had a lot of single family investors or private money lenders on those deals. Give them a mortgage, give them a promissory note, and did it that way. And then I also had a lot of people who were buying these turnkey deals from me, right? They didn't want to do any of the work. They wanted equity upside. They wanted predictable cash flow, right? Think about a syndication investor, somebody who invests as an LP, as a limited partner in a syndication. Dude, they don't want to do any work.
Yep.
Right? They want to be completely passive. They want a predictable return on their money, and they want equity upside. Dude, it was an easy conversation for me to have with these turnkey buyers of saying, hey, instead of you throwing 100 grand into this single family house and trying to get 8% with equity upside into one of my deals, I'll pay you 10%. You do literally no work. You have literally no liability, no risk, and you still have equity upside. And so it was an easy conversation for me to have. And just like, and then, on the other side, the hard money lenders I was paying 15, 18% to, I realized that just like I was going through transitions and graduating through different levels in my real estate career, broker, wholesaler, single flipper, single family buy and hold investor, multifamily, small multifamily, larger multifamily, right? You're going through these graduated steps, more sophisticated as an investor. I realized there's a lot of transactional hard money lenders who are missing out on the long-term wealth building of owning and holding assets and the tax benefits that come with that, right? Like if you're a hard money lender, you're getting taxed as an earned income tax bracket on all the dividends and gains that you get. And so I quickly realized that a lot of them were tired of underwriting the next deal in order to get paid again, and I transitioned them into a lower preferred return. So I moved them to 10% instead of 18. Like, why would they ever do that? Because deal that also kicked off cash flow and depreciation and equity upside. And so the gains from cash out refis and the gains from sales of these properties actually exceeded those 18% returns in most scenarios. So it made a lot of sense for them and to convert them into limited partners in my syndication deals. So I essentially do the Burr method: buy, renovate, rent, refinance, rinse and repeat for apartments, because I come from single family. So I never took a class on this stuff. I never read a book on it. I don't have a CCIM designation or any of this other, which I don't even know what it stands for. Like I come from the residential world. And so I liken everything to a residential level. And how I bought these smaller multifamily deals with my investors is I say, hey, you lend the money, I'll give you a 10% return, and then I'll kick you 20% of the equity forever. And my plan is to refinance in 2 to 3 years, give you all your money back, you take all your chips off the table, and then you still own 20 or 30% of the equity forever. And that allowed me to keep 70 or 80% of the equity. And that's how I did the first, 300, 400, 500 doors the first First 1,500 doors that I did
Wow.
was that way. And still, I still structure it similarly. We buy some more stabilized kind of stuff now. And I think listen, guys, there's 1,000 different ways that you can the deal based on the exit strategy, the cost of capital and everything else. And if I was buying a skyscraper that was a $400 million deal and one person was willing to write the check and they wanted 90% of the equity, but I could get some fees on it and it was stable and I didn't have to do anything and I could own 10% of a $400 million skyscraper, I would still do that deal, and at the same time, if I'm building something new construction and I and my team are working our asses off for the next on this project and we're the ones creating the value add, or we find something that's heavily distressed and we're totally repositioning it from a management perspective and construction perspective, then guess what? If I'm creating all the value, then the operator deserves a little bit more equity. And I say this because I am the operator, right? So I can say that from a standpoint of, oh, well, it makes sense for you, Tim, but guess what? I also invest my money with different operators, the exact same structure. So I preach this and I do it myself. So it's not like I'm one-sided in the way that I structure my deals. If it's a heavy value add deal and the operator is a competent rock star and they're going to be working their tail off for the next 2 years, they deserve more equity. I'm not big into taking fees though. Like I don't take any fees. I get paid when the investor gets their money back. Right. And I just started taking some acquisition fees, 1-2%. But I don't take asset management fees. I don't take fundraising fees. I don't take capital events fees. I don't take loan sponsorship fees. I don't take disposition fees. So I get paid the same way the investor gets paid, right? They get paid regardless of the property's performance. I only get paid once they get their money back and the property's performing, So
right.
I think that allows you to be in the same boat, rowing in the same direction in a position where interests are aligned, in a way that traditional syndication, that's not always the case.
That's awesome. So in terms of like the legal structure of it, I know you said it's not the traditional syndication, but is the legal structure a typical PPM? Is it like a tenant common or?
No, so it's a PPM. So,
okay.
So we do 506B is what we started out with. It was all friends and family and people we've already done business with. And now we only do 506C. You got eyeballs on you and I'm seeing, I have a pretty big social media following or decent. And so with all the eyeballs, you want to be able to talk about your deals and raise money and talk about it on social. So we just do 506C now. And that's the same paperwork, right? There's a term sheet, there's a private placement memorandum. They have to fill out the, investor suitability questionnaire. And what else am I missing in there? Yeah, and subscription agreement, right? And so it's all the same stuff. And we have an SEC registered investment for every deal that we do, and every one is its own. But most of our deals are structured the same way. Again, we're kind of in the middle now, right? The climate's changing. I don't really want to take on heavy value add deals because labor force is totally skewed. Supply chain is still all over the place. And thankfully, the eviction moratoriums have been lifted, but that's still, kind of a political thing in some communities. So we're not really doing heavy value add anymore. We are doing some new construction because that's a lot more predictable. And we are buying some stabilized stuff. So with the stabilized stuff, it's not as much work on me and my team. So guess what? We're giving up a little bit more equity in those projects. Maybe we do a 50-50 split with the investors and we structure it that way. There's a lot of people that you and I know who have made more money last year and this year than they are real estate professionals, and they need depreciation. So that's a cool way where you could say, hey, what if we do a cost seg study, accelerate all the depreciation? I give it all to the limited partners because maybe you and I don't need it. And that offsets a lot of their tax liability at the end of the year. And maybe they don't need a preferred return. So now you've got 20% of the money at a 0% rate of a preferred return or interest rate on it, and then really you can go and pay a retail price for a deal because you're only paying 5.5% on the other 80% of the bank money that you got on that deal. So it's like, dude, I think who's going to win over the next 24 months is people who can raise money and people who can creatively finance deals. If you can do those two things, I think you're going to clean up over the next 2.
That's awesome. So I'd like to circle back into your transition from 506B to 506C. At what point did you make that transition? Was it the number of units? Was it the amount of asset under management? Was it, once you got big in social media? At which point did you make that decision?
It was more the social media thing. It was, I had events and I had 200 people in the audience, and I wanted to be able to talk about deals without dancing on my words, or tiptoeing on my words. And so it lowered our liability of being able to talk about deals, current deals, past deals, and all that stuff, where I just didn't, I was talking about and trying to give case studies and try to educate and inspire people. And then it just created liability on me. And I was like, it's cleaner if I don't, do a 506B anymore. So, but what's cool is there's still the SEC came out with something where you could start out as a 506B and then transition it into 506C. So if you have investors early on, or you have some friends and family who are non-accredited, you can open up the initial offering to them. They can come in and commit to a certain number of units. If you don't fill the whole thing up, you can transition it to a 506C, which then you can mass market it. But from that point forward, you can't take any more 506B non-accredited investors. So there's some cool stuff that you can do. I see Grant Cardone's doing like non-accredited small increments, Reg A type stuff, which I've never gotten into and never played around with. That's another way. I saw somebody in here is doing like a tokenized way to do it. The limitation with that is you're not allowed to sell your equity in an investment in the first 12 months that you own it. So you have to raise the money, but it creates an amazing opportunity for people to liquidate and create liquidity in an otherwise illiquid investment, typically by being able to tokenize it after or sell portions of those tokens after that 12-month mark. So there's a lot of ways to skin the cat, and being on discussions like this and learning different strategies, knowing that there's not one size fits all. The more quivers you have or the more arrows you have in your quiver, like the more dynamic you're going to be and competitive you're going to be in being able to raise money and structure deals creatively in the next 24 to 36 months.
That's awesome. So I know you've raised over $100 million by now. What would you say is your top 3 ways of raising money, attracting passive investors?
Yeah, man. Great question. And listen, guys, I've never done institutional equity, right? The only way I've ever raised money is by individuals, people like you and me, who have 100 grand, 200 grand, $2 million. I think that my biggest investor has 4 or 5 million with me. And I have a few people in the 7 figures. I don't know, maybe a dozen people in the 7 figures. And then a lot of people from 100,000 to hundreds of investors in that realm. So I've raised about, I don't know, 110, $115 million that way. And what I would say is, like, the simpler you can make it, the better. When you're talking about waterfall structures and you're talking, dude, you're going to lose 90% of the population as soon as you talk about that, right? If you say, hey, I'm going to pay you 8% return, they can conceptualize that, and when I get you your money back in the next 36 to 60 months, you're going to maintain your equity forever. And I'm going to kick you 1% equity, which might not seem like a lot, but it's a $15 million deal. And let me show you what that looks like. It pays off cash flow. You get depreciation, which offsets a lot of the cash flow. And you have equity growth as the property appreciates and as we pay down principal. And by the way, another deal with me and another deal. And my goal is over the next 20 years, when you're ready to retire, you're in 4, 5, 10 different deals with me, paying you these pops of cash flow on a monthly basis and these big pops of refi proceeds or sales proceeds every couple of years too. Does that sound exciting? Yeah. Dude, that's so easy for somebody to conceptualize, right? As opposed to like, well, I think let's get your calculator out and look at waterfall structures, and after you get this pref, and then there's this IRR hurdle. Dude, what are you talking? I've done $400 million, more than that. I've done probably $600 million of deals, and I still don't understand that shit. So it's like, how is somebody who's not in the industry going to understand that? The simpler you can make it, having a beer with somebody at the pool, or meeting somebody at the kids' baseball game and trying to explain to them what this looks like, dude, just keep it stupid simple. So that's I think a big key of taking complex shit and making it simple is one of the things that I've been pretty good at. And I think I've been able to attract a lot of investors and students because of that. Because I simplify complex thoughts, or at least I try to. So I think that's number one. The second thing is there's money everywhere. It is friggin' everywhere. You need to be talking about it. How are people aren't going to raise their hand and come to you and say, do you take money for your investments? They don't even know if you are doing these investments. You have to be talking about it. You have to be sharing it on social media. It's a free marketing tool, and it is the most powerful marketing tool this world has ever seen. It's free to have 5,000 friends on Facebook. You guys realize that? Free.
Yep.
You know who all my investors are? Entrepreneurs. Almost all of them are entrepreneurs who are not real estate professionals. I have a lot that are real estate. I don't know, 20%, 15% that are real estate. That are real estate professionals, but about the vast majority are traditional business owners who are really good at making money and usually not as good as saving it and really bad at multiplying it. So like I'm in an e-commerce mastermind. I don't know anything about e-commerce. I've never done e-commerce, but I'm in there because I'm the only guy who knows how to multiply money. And all of them are really good at making money, and they don't know what to, they're fearful. They're like afraid of what to do with it. So they just stockpile it and they sit on it. And as soon as you can educate them and be seen as the resource, all of a sudden, all of them put their money with me, you know, and they all tell all their buddies because nobody knows how to multiply. Like we are a very hot commodity. Like think about the market right now, guys. Think about what's happened to stock portfolios, down 30% on average. You know, tech down 50% on average. You got crypto portfolios just obliterated for the most part, you know, down 70 to 80%. Guess what's not gone down? Real estate, rental real estate portfolios. Nothing rises with inflation and tracks inflation. No metric in the economy tracks inflation better than rental rates. If the economy's up by, or inflation increases by, you know, 10%, 11%, guess what? You can expect rents to increase by 11%. There's nothing better that tracks that. And not only are you getting a better return than the stock market and crypto, but you're not losing your principal, right? Not only like you're not only getting a better return, but and it's tax advantage. It's like we have an opportunity, and I think a responsibility to go and share what we do with as many people as humanly possible, because they're just getting crushed in their retirement portfolios, in their cash positions right now, and we have something that's better. Like you could see how passionate I am, because like I believe in it. If there was something that made more money, that was better tax advantage, that paid dividends, that had long-term equity growth and depreciation and principal pay down, backed by a tangible asset, I'd be doing it. I promise you. I'm a lifelong student of personal finance. There's nothing better than commercial real estate. And we have an obligation to take this to people and show them what we do and how we do it, and let them know that there's places that they can put their money. So that's the other thing that I would say is you gotta talk to people. Go and friend up every entrepreneur you can find on social media and get to 5,000 friends on Facebook. Friend them all up. All of a sudden, when you post, they're gonna start seeing your stuff. And it might take a year, it might take 3 years, it might take 10 years. And then all of a sudden they sell their business. Boom. Sitting on 15 million, they got to deploy it. Boom, I've been watching you, Tim, for the past 5 years. Hey, this is the first you've ever reached out to me. Yeah, like, hey, I just sold my business. I want to put about 2-3 million in play with you. Do you have any deals? I don't even know who you are. No, but I've been watching you for 3, 4, 5 years. I see you're a family man. I see you got good values. I like who you are. I know what you stand for. I feel good putting $2 million with you. What? We live in a voyeurism society where everybody's watching. They might not engage. They might not like, they might not comment, right? But they are watching, and they're watching what you do. And so you got to be out there educating, inspiring people on social media. Go and interview your CPA. Talk about doing real estate deals. Talk about syndicating. Talk about what returns look like, right? Go and interview your real estate attorney. Talk about real estate stuff, anything, you know, mortgages, syndication, how to secure your investment with a promissory note, like whatever. Go and interview your property manager. Go and interview your contractor. Go and interview your whoever. whoever else, one of your vendors, one of your suppliers, like go and talk to other, let them create the content, but you being the medium that gets conveyed to your audience gives you the trust and respect to your audience, even though you're not even bringing the value. You know, it's powerful stuff. So you got to be talking about it. You got to be talking about it all the time and in front of everybody. So social media is where I get a lot of money. And then masterminds, right? I talked to you about the e-commerce mastermind. I also, I mean, I'm probably in 5 different masterminds, and there's a lot of people who sell businesses or, obviously real estate entrepreneurs are pretty entrepreneurial. A lot of times have their hands in different things. I got a buddy who's in this ERC stuff right now, like the emergency relief credit or whatever it is. That dude, he's pulling down like 20 million a year, something stupid over the past 12 months. Now it might not last, but dude's got 10 million bucks to deploy,
Wow.
So it's like, you never know. You just hang out with people who are resourceful, who are looking for an edge. I let them go and pursue getting rich quick in crypto, selling e-commerce stores, doing ERC tax credits. I let them kind of like, you guys ever seen The Men Who Built America?
Yep.
Hands up, Men Who Built America. Dude, no, only a few of you guys go, and I think it's free on the History Network, or you can buy it for $4 on Amazon on the Prime thing. Dude, it is unbelievable. They interview Rockefeller and Carnegie, or not interview them, but they essentially share their stories, and they interview present day titans, right? Like Donald Trump, Steve Wynn, Donnie Deutsch, Carly Fiorini, like all these different titans of industry today, Jack Welch, and talk to them about, correlations in business from 100 years ago, 150 years ago to today, and unbelievable business insights. It's like a master's degree, and it's so entertaining too. But one of the things they talk about is John D. Rockefeller was an oil man, but he didn't dig for oil. He thought gamblers dug for oil. He let them go dig for oil. And he said, businessmen refine oil. Let the gamblers go dig, and then they'll bring the oil to him. He then refines it and sells it. He doesn't have the risk. He has the predictability.
Wow.
So I do that same thing in my business. I let other people go out and make money, get rich quick in crypto, get rich quick in e-com stores, get rich quick in ERC tax credits, get rich quick. There's a baseball card stint where people were making $100,000 a month that I knew, selling baseball cards, like crazy stuff. And I let them go do that. I don't go and chase shiny objects. I refine oil, right? I let them go make their money, and then they bring it to me to then deploy it. So that's staying inside your lane and staying focused.
That is awesome. Wow. I've never even, I've seen Titan, I've seen all those shows, but never thought of it that way too. That's super, super powerful. Yeah. Now I know you intentionally put yourself out there as an influencer, as a mentor. So it's easy for others to see you as as the expert, as an authority, right? So how do you recommend the listeners who are listening, and perhaps right now they don't have that that level of influence, they're not positioned themselves as an educator, as a mentor, what would you recommend them to do to begin that?
Yeah, I mean, I wasn't either. Right. I truly believe that wealth is like sunshine, right? Like if you and I go outside, Tim, you getting sunshine takes no sunshine away from me. And me educating you and teaching you, how to go and build wealth, right? Just go buy some rental real estate, like doesn't adversely affect me at all. A lot of people, well, you're training your competition and you must be make all your, I make 90+% of my money from doing deals, not from coaching, right? It's less than 10% of my wealth, comes from coaching. And so it's like, I go and educate people, not because I'm creating competitors, I'm creating collaborators. They're going to go out and find a deal, and they're going to be like, I don't feel comfortable taking this down by myself. Let me hit up Tim, and maybe I'll joint venture with him, or maybe I'll sell it to him and he'll kick me some equity and I can just kind of ride his coattails on this deal. And instead of me, paying money to get educated, or me losing time or losing money, getting punched in the face, trying to take this deal down on my own, I can actually make money by linking arms with somebody who's been there and done that and can teach me, help me fast track on how to build this. And so, and the same thing is with sourcing deals, and then also in raising money by me being on shows like this and me talking on social media about how I do what I do and educating people. I'm seen as an authority. And I didn't try to go out seeking that. I just tried to like help people because I saw all these broke ass people and all my friends who are trading their time for money and at a job. And I'm like, dude, just go and buy a rental property. Like, I got a really good friend who bought a townhouse in DC and lived in it. And then the one up next door came up for sale, right? He works for the government. He's got a full-time job. When he retires, he gets paid 40% of his highest salary. All right. So he makes like 180 a year right now. He's pretty high up in the government. And, but he'll make like 70 grand or whatever the hell he told me. It's like $70,000 a year in pension after he works for 25 years for the government. Okay. He bought the townhouse that he lived in and the one next to it. Right. And then he bought another one just now. And so now he owns his own home. And then he's got these two townhouses. Let's not even include his own home. These two townhouses cash flow almost $1,000 a month each. And they're paying down principal and they're appreciating over time. They're each worth about $750 right now. Okay. Over the next 25 years, they will be worth at least $1.5 million each. I'd say that since 2000, property values have at least doubled, right? Maybe more. Let's say they just doubled. This dude now has two townhouses, which he fell into ass backwards on accident, right? He didn't intentionally go out and try to be a real estate entrepreneur. He fell into two deals. And those two deals are going to be paid off. And it's going to be $3 million worth of assets that he's going to own 25 years from now. That both kick off probably, I'd say about $4,000 a month in possible. I mean, that's what they're renting for right now. They're probably going to be bringing in $8,000 a month each at that time, you know? So you're talking about like 16 G's times 12 months. That's 180 some thousand, almost $200,000 a year in cash flow. Let's take out operating expenses and stuff. Let's say he nets 150, you know, 140. That's double a part-time side opportunity that he spends an hour a week on is going to give him $3 million to pass down to his kid. Gives him double what he makes working his dick off for 25 years for the government. And when he dies, his family doesn't get anything. They don't give a lump sum, right? Think about that. Think about how powerful real estate is. So like me understanding or me like realizing that, I was like, more people just need to buy a property, right? Just buy one. And I started talking about it on social media. And as I was talking about it on social media, all of a sudden people would raise their hand and say, hey, can I sell you a deal? Can I buy a deal from you? Can we joint venture on a deal? Can I lend you private money, Tim? Or do you coach? Do you mentor? Can I pay you to coach me? And you start hearing that enough times, you're like, all right, let me put 15 people in a room and just kind of like share some ideas and strategies. And it started just snowballing, right? It started, just rolling down the hill, and it started compounding over and over and over again. And then essentially a branding company, a publishing company reached out to me and said, hey man, let's make you the face. We'll put all the dollars behind it. You just, train and educate. And that kind of, created commercial empire. So that allowed me to go out and kind of put me on a platform. When COVID hit, I was able to buy my brand out from that publishing company, and now I own it myself. So I was able to, I don't have as much overhead as they do. So I dropped the price and try to give more value and all that stuff. So my point being, I didn't try to become a guru, right? All I tried to do was help other people. And I think that was conveyed in a way where it was genuine. It was authentic. This guy actually cares. He actually gives a shit about wanting people to do more, be more, have more, give more, right? And so it allowed me to, be in a position where I just helped other people. And then it just turned into deals, turned into money, turned into opportunity, turned into coaching income and consulting income. And so but it wasn't intended that way. It was just trying to go out and educate people. And I promise you guys will do the same thing. It'll open up doors of opportunity to you. Deal flow, money flow, which is really all that matters. And I have people who even want to come and work for me for free, just to learn and be around us. And so it's like the only three things that matter in this business are deal flow, money flow, and refining your operations. And social media and having influence on that opens you up. And you don't need a big following. You need 1,000 tribe members, and you can accomplish anything.
That's awesome. I love that. And just that mindset of just being out there, helping others, educate others. I mean, that's very doable, right? Even if that education is like what I'm doing right now, where you interview an expert or, sharing with them an article, it's very doable. So I love that. In terms of maintaining these, so you build these relationships through social media. What is your way of maintaining that relationship, keeping them, I guess, in the loop of all the deals that you have? Do you do a newsletter? Do you do, any direct mail? Is it all email? What are some of your strategies there around that?
Of just capital management, you're saying? Like keeping
No,
investors in the loop?
yeah. And both existing investors and also potential investors.
Yeah, so I mean, like I'll post on social media that I have an upcoming deal, and it's a 506c. If you're interested, here's the registration link. Hop on a webinar. I'm a big believer in one-to-many activities. One-on-one phone calls is you're not gonna raise hundreds of millions of dollars. You have to figure out how can you answer all the investors' questions. Yeah, dude, you do a couple deals, and it's all the same questions, right? Like, what's the asset? What's the return on investment? What's the exit strategy? And tell me more about you. Why should I invest with you? Like that's about it. And so if you can answer those questions, how am I secured? What is the tax ramifications of this? Do I get a K1 at the end of the year or 1099? Like it's just you end up getting the same questions, and you put a frequently asked questions thing PDF together, or you address it in a webinar. So typically what I do is I have an email list. Everybody who's ever said that they want to invest, anybody who I've ever done a deal with, anybody who I think has money, and I have them on an email list. I'll send an email out, very, very simple, couple sentences with some bullet points on the deal. If you're interested, check out the attachment. The attachment's like a 2 or 3 page offering kind of memorandum, very simple. Again, like the first page is about the deal with some pictures. The second page is about the returns, and that's about it. And then in the email also, if you're interested, after you take a look at this investment summary, hop on the webinar. It'll be a 45-minute webinar. Tim will go through everything, and I answer all those questions on the webinar. Who is Tim Bratz and his team? Like, why would I trust him, and why is he a competent person that I should invest with? Right? That's a very important question to answer. Number 2 is, what is the asset? Talking about the deal. Here's where it is. Here's some metrics around it. Here's the current occupancy. Here's the upside that we see. And then most importantly is, how do I get paid? Like, what does it end up looking like for me as the investor? So if I bring you 100 grand, what are the ways? And I break it down. You get paid a preferred return plus cash flow, plus depreciation, plus equity growth. And here's what that all looks like on a cash on cash standpoint. And then when you get your cash back, here's what the equity growth looks like and the equity value if we're refinancing it or if we're selling it or whatever. So that's how I do it. So it's a high level email, some bullet points. If they like that, they can get into the offering memorandum. If they like that, they can hop on the webinar. And if they still want to go beyond that, then we'll hop on a one-on-one phone call with them. And it's not usually me, it's usually my chief investment officer, who's way more detail oriented than I am. And he gives them a level of he's an attorney and stuff. So he gives them a level of confidence that we're very professional and have all of our stuff together. So that's how we attract the money. And usually we have enough people on the webinar and enough excitement that it fills up pretty quickly. So we'll fill it up within a webinar. We typically oversubscribe by about 25% because 25% usually falls off, and then we can fund the deal. And then once we take down the deal, we make preferred distributions on their preferred returns on a quarterly basis. So within 30 days of the end of every quarter, so in April, July, October, and then January, we make distributions to all the investors. And along with that comes an email update or a video update. And we typically include like a PowerPoint presentation that just goes boom, boom, boom. Here's the current occupancy. Here's the percent of construction that's done. Here's where we are with rents. And here's the link to the pictures, and, just letting them know where we're at. And sometimes I'll put a video in there and go that route. And so we keep it simple.
That's awesome. What software do you use to manage that?
We use InvestNext, which is, we've looked at probably, 6 or 8 of them. And we just like that one the best. They're a small enough company. I think they're headquartered out of Michigan. They're a small enough company where we have a lot of influence with them, and every time we need something changed or added or edited, they do that. But they're big enough where they have access to capital, and
Right.
they have the bandwidth in order to make those updates and changes. So they do a great job.
That's awesome. Do you have any other tools or resources that you like a lot?
Man, tools, resources, dude, I'm a simple guy, man. Like my email list for my investors is an Excel spreadsheet. Like I have their name, the first name, last name, phone number, email address, and some notes of my like there's people with fancier CRMs, and I think if they get caught up in that stuff though, it's like what actually matters. Like guys, there's only a couple of metrics that actually matter. The two most important metrics that you can be focused on right now is number of offers you're making on a daily basis. You can't control if deals close. The one thing you can control is how many offers you make. And eventually, the more offers you make, a ratio will appear to how many deals close, right? There's going to be deals that fall off and don't make it through due diligence. There's going to be deals that have title issues. There's going to be deals that blow up or financing comes back on terms that you can't agree with. And for some reason, seller goes crazy or whatever. That all happens. What you can control is the number of offers you make on a daily basis. We're making offers all the time without ever seeing a property, right? We know about what it takes to renovate a unit. We know what the metrics will look like. We know how we can increase income, how we can decrease expenses, and we can do all of that remotely from anywhere in the world. And so we look at a deal, we underwrite it, we make an offer. If we're in the ballpark, then we'll submit a letter of intent. And that's what I mean by like an offer. An offer to me is like just any way of swinging the bat, meaning if you can have a verbal conversation, hey, you're asking 2 million, I'd be in 1.5 range. Is it worth continuing the conversation? That to me is at least swinging the bat, at least getting the conversation. No, go and fly a kite. Okay, I will. I'll come back in 6 months when it's still listed at $2 million. Or yeah, hey, totally worth an offer. I'll present anything, like bring it to me and blah, 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 blah. So like that to me is an offer. Also an email having that conversation is an offer. It doesn't have to be a letter of intent. It doesn't have to be a formal purchase and sale agreement. It's just swinging the bat, getting the conversations going of, are we in the same neighborhood numbers wise? If they say yes, then we put a formal letter of intent together, submit it, go back and forth on terms. Once that gets executed, then I go out to the property. I'm not wasting my time, dude. I'm in the game of sifting through deals, right? I don't go and try to make a deal work. I try to sift through deals faster than anybody else, so that way I can snag up the good deals, right, first. So that's my mentality. We don't get caught up on a certain deal or anything like that. We just rip through deal after deal after deal. We make offers. We let them know we're very serious, very qualified buyers. And if the terms don't make sense, then they don't. I will say with the change in the market and interest rates, we're making 2 offers right now. So right now we make an offer at us coming in, buying them out, and bringing the full capital stack, meaning we cash them, we get a loan, and we raise all the money, and they're out. And it's typically a lower offer. It's typically like 70, 75% of what their asking price is. Or we offer 2 offers though. The second offer is us bringing 70 or 80% of the deal, and them carrying back 20 to 30% as in like either an equity position or a seller carry note that's unsecured. And so that allows me, if I'm willing to give them their price, they'll possibly do it on my terms. So
Right.
It allows me now to go get 70% of the money at 5% interest rate, and then get them to carry back the other 30% of the money at 2%, 4%, maybe a 0% interest rate. Maybe I don't give them any pref or any equity, and I just pay them all principal payments. Or maybe I say, hey, I'll give you this price point. There's no preferred return, but I'll give you 20% of the equity upside in the deal. And now you gave up 20% equity to the seller. They now have future growth. They got their price point. They have a little bit of a note that'll pay them in the future, plus 20% of any gains above and beyond that. And your blended cost of capital is lower because you got them to carry back 30% at 0% interest rate. So we make, and that's a higher price point, but it allows us to make an offer that's an either or offer instead of a yes or no offer. Does that make sense?
Yep. Yeah. And I love how you incorporate that creative financing kind of structure from
time.
the single family over to this multifamily.
Every time,
Uh,
man.
That's awesome. So I know you started in the last market crash, right before the last market crash. Where do you see this market going?
Yeah, I was in the trades kind of. I had like a painting company. I was an intern and a broker and stuff during 05 to 09. I bought my first investment property in 09. I bought my first apartment in 2012. And, obviously been through COVID and a lot of other stuff. Nobody's got a crystal ball. Nobody saw COVID happening. Nobody saw the rise in rents and this boom that happened over the past 2 years either. All these economists who are predicting the future, who knows? But I think there's a few things that are pretty clear. And the first is that prices have been very inflated. I don't know if they can go any higher without the Feds, increasing interest rate, try to soften some things. So that's obviously happening. It has spooked a lot of sellers, but the sellers haven't come off their price. I read 2 articles this weekend on the gap between sellers and buyers now, right? And sellers aren't coming down, buyers aren't going up. So it's been a very slow go over the course of the past couple of months. That's why I think if you can get in there and make it attractive for the sellers by them carrying back the seller financing on that gap, it gets them their price point on your terms, and you can get into a lot of deals that way. So I think that's going to be a big deal. I mentioned that nothing tracks inflation better than rental rates. And I think rent rates are going to skyrocket, and I don't think the biggest driver of inflation is energy costs, and energy costs are through the roof, right? It's too much red tape in order for a lot of the oil companies and stuff to dig here. And so Biden, kind of put a constraint on that. And they say 2 to 3 years before any oil prices start coming down. So that means we're going to see 2 to 3 years of inflation. If that happens, then rents are going to continue increasing by 8 to 10% a year over that time frame. So I love that I can get fixed rate financing right now at 5%, 5.25%. And I know that rent growth is going to keep on happening that much, and that stuff's going to compound. You take a look at what happens when inflation occurs. So quick backstory: 1960 to 1990, the American government came off of the gold standard, right? And so $1 in 1960 was $4 in 1990. Okay. So it devalued by 75% in 30 years. Wow. From 1990 throughout the dot-com bubble burst, the global financial crisis, and COVID up until 2020, before COVID hit, 1990 to 2020, it was devalued by another 50%. So a basket of goods that cost $1 in 1960 cost $4 in 1990, cost $8 in 2020. Wow. And then the government printed 40% of the monetary supply in the past 24 months. What do you think that's going to do to the devaluation of the dollar? And how long does it take for asset prices don't increase, but kind of they do, because the dollar devalues and it takes more dollars to buy that asset. Does that make sense?
Right. Yep.
So what took 30 years for values to double is probably going to happen in the next 10 to 15, based on printing 40% of the monetary supply in 2 years. So I don't think there's any way not to get around that. And my final point would be, dude, I don't think the government gives a rat's ass about printing money any further, and about playing with interest rates anymore. And I don't care who the president is, whether it's Republican or a Democrat. I think it's proven that nobody wants the economy to collapse on their watch, and they will just keep on playing with interest rates and keep on printing money in the future. And so I think we're going to see more of what we're seeing right now, of printing of capital, and or as soon as the regime changes in 2024, if things get shaken up enough over the next 24 months, I think interest rates are going to drop substantially again. So I think it's a good buying time right now. And I think low interest rates, I think 6 or 7% money is free money anyways. So like, I'm not stopping buying because I have good buying criteria and I continue doing good deals. I'm not timing the market. I'm not trying to hit home runs. I'm not trying to hit grand slams. You know what wins baseball games? Base hits. Base hit after base hit after base hit after base hit after base hit. And all of a sudden, more runs are scored off of more base hits than going up to the plate in the bottom of the ninth, hoping to hit a grand slam to get a win, right? I'd rather see you guys do good deal after good deal after good deal after good deal after good deal. Like, you're going to go time the market? Like, who are you, Nostradamus? You're going to go and perfectly, every time I try to time the market, I got my ass handed to me, right? Like, just go out and do good deals. And if you go and do good deals, they're going to compound. You're going to find yourself sitting on a portfolio of hundreds, if not thousands of doors. And when the right opportunities and the right buying criteria does come along, you're going to look like you got lucky because you did the footwork and you did the things that you had to do in order to just build the portfolio, and you were positioned with the private money lenders, with the resources to find these deals, to get the first crack at these opportunities, to get a seat at the table because you're well respected in the community because you've done a bunch of deals, right? You have the reputation of taking down deals. That is more important, and that gets better deals than trying to time the market. And it's more predictable.
That's awesome. I love it. All right. Now I'd like to hear your passion projects. I know you have a couple of different ones. So share with us at this point in your life, you know, what's important to you? What are you passionate about?
Yeah, man. That's a good question. You know, I'm at a point in my life where, like, I wanted to hit $1 billion in portfolio value and then go beyond that. And then, dude, all of a sudden, like, that's important when you don't have money, you know, and then all of a sudden I have money. I live on the ocean. I have a ridiculous mountain house. I own an island, right? I have
I love
amazing lifestyle. I have amazing time freedom. I have amazing kids and wife and family and friends. And it's like, dude, my lifestyle wouldn't change if I quadruple my portfolio. So now it's more about impact for me. And you know, in a self preservation kind of a way, it's like you actually the more you impact people, the more it comes full circle too, you know? So it's like, it's cool when you can lead with value, and that's what I'm really focused on. So, you know, we've done some stuff like I have the kids books, Little Legacy Library, littlelegacylibrary.com. It essentially takes those classic personal development books like Think and Grow Rich and How to Win Friends and Influence People and Richest Man in Babylon. It creates children's versions of those books. So if you've got kids 4 to 10 years old, they're really powerful, really cool books. I'm partnered up with my wife and one of our best friends who wrote the stories, so I can tell you how good they are because I didn't write them. I just gave, you know, feedback and insights on it, and they're just powerful. You know, it's like you asked me, hey, how'd you get in this personal development, this mindset game? I had to go through it all on my own because traditional education didn't teach it to me. And I had to do it throughout my 20s and my 30s in order to retrain my brain. And I'm like, what if you're just programmed the right way early on, you know? And so that was a big impetus of this. So that's kind of a passion project is the kids books, Little Legacy Library. Another one is Legacy Wealth Holdings, or I'm sorry, Legacy Wealth Academy that we just launched. And it's essentially like my mastermind has a couple hundred people in it. They're rock stars in all asset classes in the commercial real estate world. Not just multifamily. It's some of the best, most amazing people you've ever met. And they're amazing at what they do in their different asset classes. And I thought, you know, it'd be cool where I'm not an expert on other asset classes. I'm an expert on multifamily. I've done a lot of short-term rentals. I've done some, I've owned, 3 different self-storage facilities and office buildings, some other stuff. But like, there's people who do a lot more of that in my mastermind. I thought, maybe like they want to increase their influence. I can create a platform for them to coach and create kind of like a master class for other people and educate, you know, and so that's what we ended up doing. So we have like 20 different master classes in real estate and wealth building topics across the board, raising private money, getting your first 10 rentals, scaling into multifamily, mobile home parks, self-storage facilities, Airbnb, all that stuff. And like legitimately, I could sell it for $1,000 a month. And I was like, I want it like available to these badass kids on Instagram who hit me up, who are like 16 years old in their mom's house, who want to learn how to do real estate. And I was like, how do I make it accessible for them? And I thought, yeah, maybe I'll price it from I don't know, $79 or $200. And I was like, you know what? let's make it like $50. And I was like, if I make it $50, let's just make it 10, So it's $10 a month for all these master classes. And it's like so much friggin' value, and it's open to the masses. And so like we launched it last month. We got over 200 people already on it, and just amazing reviews. And so like that's a cool piece where I could say, hey, I don't make money off this anyways. It's just like all the dollars that we get go back into marketing, which isn't that much, right? I make $2,000 a month that just goes back into marketing, and in order to expose it to more people and make a bigger influence. So if you guys are looking for something, check out Legacy Wealth Academy. You can learn a lot more about a lot of different asset classes and how other people find off-market deals, how they raise money on those deals, and how they operate, and what their exit strategy is, and how they structure the financing and all that stuff for all these different asset classes. lwacademy.com. And it's like I said, it's $10 a month, or you can pay for it for a year in advance for $100. So it's like, it's just a cool resource with a ton of value. And so that's what I'm looking forward to doing, man. I'm pouring fuel on the fire on the social media side, trying to give as much value as possible on YouTube. So check out Legacy Wealth on YouTube, and there's a lot of value. We drop 2 videos a week on there. And but yeah, man, I just, that's really where I'm at right now. If I buy 50 to $100 million of deals a year, great. I got my portfolio that I currently own, and just helping my team. Now I'm like, vesting them into equity, which is kind of cool. They're building some long-term wealth, and it's practicing what I preach.
Awesome. I love it. And I love how you always like go the extra mile to deliver a ton of value to other people.
Appreciate that.
Yeah, I love that. So if you can go back to your younger self, what is the one lesson you would teach or share with your younger self?
I think young people, especially with social media and stuff today, can be extremely insecure. It was like that when I was a kid. And although, I don't know, like I wasn't a nerdy kid, but I wasn't like the most popular kid either. Like always had, I played sports. I was friends with the nerds. I was friends with the jocks. I was friends with the kids in the honors classes. I was friends with the kids in the, special education or like special needs type of classes. So it's like I kind of ran in all different circles. And I think the confidence piece is a big holdback from a lot of people. Having the confidence to go on social media, and who cares, like not giving a shit about what other people. Dude, as soon as I got to this point, probably my late 20s, 30 years old, which is sad. It took me that long, right? And there's still people who are paralyzed by what other people think about them, who are way older than me. But I got to this point when I was like 30, 32 years old, and I was like, why do I give a shit what other people think about me? Right? Like, and as soon as I reached this point of not caring what other people thought about me, they ended up liking me more. It's like, oh, this guy's genuine. He actually doesn't care what other people, like, he's just trying to speak from the heart. He's trying to be a good human being, like knowing what your own values, and that to me, I think is a big deal of not caring what other people think about you. And that comes with confidence, right? And confidence comes with winning, little victories that compound over time. You know what confidence is? Confidence is the memory of winning. Write that down. Confidence is the memory of winning. Not one time, but many times over and over and over again. And if you can build confidence, I didn't know how to build confidence. And if you can teach a younger self or a younger generation how to build confidence by getting little victories, don't go after the 100 unit. Go buy one, then buy a duplex, then buy a quadplex, then get into an 8 unit, then keep on doubling your portfolio. Dude, those little victories of raising money on a $200,000 deal before you have to raise it on a $2 million deal, dude, that builds confidence. It's little victories. And I'd rather see somebody do that. They're going to have a lot more staying power than the person who falls into a 300 unit portfolio right out of the gate. So develop the confidence. If you develop the confidence and then roll that into your influence, right? And the 2 key characteristics, guys, I'm giving you gold. Hopefully you guys are taking this in and understanding this, because it changed everything for me. Having influence is what's needed in order to raise money. It's what's needed in order for people to want to pay you consulting fees. It's what's needed in order for people to want to sell you a deal or partner with you on a project. You got to have influence. Influence comes from 2 things: respect and trust. in your audience, right? And the people that you're influencing, they got to respect you. They got to trust you. And this is, since this is a money raising panel, I'll give you an example. My dad is like a millionaire next door. He's worth like $2 million. He was a police officer who had a part-time security business and made 3 times as much money in his security business than he ever did working a policeman job. And so he's got some cash, right? House is paid off, sitting on a little bit of liquidity, some money in the stock market, getting pummeled in the stock market. And when I'm and this is 2008, 9, 10, 11, right? I'm in real estate, and I asked my dad for money. My dad respects me. I'm sorry, back up. My dad trusts me because I'm his son, right? Car breaks down, he knows he can call me. I'd be there for him. I'd fall on a sword. I'd jump in front of a bullet for my dad. I love him to death. He loves me to death, and the trust is there. What wasn't there though? Respect. My dad didn't respect. You guys ever run into this? Anybody ever go to somebody who's in their family, in their circle of influence, their buddies that they've known for a long time, who know you from getting hammered drunk or getting arrested, underage drinking when you were in college, or toilet papering houses and getting arrested when you were in high school, or failing in business for many years before you were successful? The trust is there, but the respect's not there. So my dad did not invest with me until 24 months ago. On a $100,000 minimum investment, he was only willing to bring 50 grand. That shows you the importance of having both trust and respect. And at the same time, guess what? I could run an ad, and I could pound my chest on Instagram and Facebook and tell everybody how great I am and how many doors I own. And they might respect me. They don't trust me. Who's this? A dickhead, like arrogant asshole. Like, who cares about this guy? Like, they trust me, or they respect me, but they don't trust me. You need both to have influence, and you need both in order to raise money. You need influence in order to raise money, right? So how can you do that? The way that you do it, guys, is by educating and inspiring. You educate people, it builds respect. You inspire people, it builds trust. You educate, you inspire. You're always posting about those two things. If you follow me on social, follow me on Instagram, follow me on Facebook, follow me on YouTube, I'm always trying to do those two things. I'm trying to educate people, and I'm trying to inspire them, right? That this whatever life they thought they had to lead isn't, right? Like, there's so much more out there. There is this abundance out there. Like, there are 700,000 multifamily properties alone, not including all the other asset classes, just multifamily, 5 units and bigger, 700,000. You know how many I own? 60. And I have a ridiculous lifestyle, right? You don't have to light the world on fire. You just got to go and do some deals. Put your head down. Don't look left. Don't look right. Work for 5 to 7 years of your life, a season of your life, and you will live like people only dream for the rest of it.
That's awesome. Love it. Love it. All right. So for the listeners that wants to reach out to you and further connect with you, get into your funnel, where do you want to send them? How should they go about doing that?
Social media is the best. And Paul, dude, Legacy Wealth Academy is $10, bro. Come on. Like, you're asking for a coupon code. I'm messing with you, man. No, I'm sorry.
I always ask.
Yeah, you must be from New York, man. I know you're I live there. I'm the same way. And no, I'm a big believer in always asking. But yeah, it's $10. You pay for it for a year in full. You get 20% off or something like that. So no, listen, guys, I'm on social media. I'm here to just provide value. I'm here because Tim asked me to be here, and he's somebody that I respect and has a ton of influence in this space. And I want to do more with them, and so I like supporting the good guys. And if there's any way that I can support you guys and help you out, point you in the right direction, I answer my own messages. Hit me up on Instagram, hit me up on Facebook. If you got a question, I'll point you in the right direction. If I have a resource or a YouTube video or something like that to it. And if you're interested in, connecting or coaching or partnering up on stuff, just shoot me a message and we'll figure out what that looks like. But, I'm here to provide value. I'm not, I believe so heavily in Legacy Wealth Academy. I think everybody should check that out because it's such a low price point. And if you don't like it after a month, cancel. It's like $10 risk. So, but yeah, I appreciate you, man. I love you. I appreciate you having me here.
Yeah, definitely. I mean, gosh, I appreciate you so much. It's been a wealth of amount of information, and I know we even going over time here because of all the questions I wanted to ask you and all the things I wanted to learn from you, and your answers has been phenomenal. Very, I mean, yeah, like very high level, very inspiring, and like eye opening. So I really appreciate you. Thank you so much for being on the show with us today.
No, I appreciate you guys too. So I have to drop off because I have some dinner reservations. So,
Okay.
but I appreciate you guys. If there's any other questions that you guys have, again, don't hesitate to hit me up, or we'll jump on some messenger back and forth or something. And Tim, we'd love to do more together, man. So if there's any way that I can continue to support or ways that we can collaborate, don't hesitate to reach out, man. I appreciate everything that you're doing and got a ton of respect for the impact that you make in people's lives. So thank you.
Awesome. Thank you. Thanks, Tim. Bye,
See
brother.
you guys.
See you later. Thanks.